So while some financial oversight might be needed these days, my next guest says all the regulations are costing financial services companies a ton of money in lost business, specifically overseas. And you won't believe what he was told when it comes to dealing with international customers. Peter Schiff is the CEO of Euro Pacific Capital and the author of a new book, The Real Crash. It is great to have you back on the show. And I just want to tell our audience that one of the reasons why you and I are talking about this tonight is because Bank of America, of course, sold its private banking arm to another firm overseas, and this caught your attention because you were in a similar situation. Tell us about that.
Well, sure. First of all, the important part of this story is what motivated Merrill Lynch to sell in the first place. And if you go back to the news reports when they first announced that they were looking for a buyer, Merrill said that it was no longer viable to be in this line of business because it was too risky. And the risks were regulatory, for compliance costs and for fines related to anti-money laundering laws. Merrill Lynch wanted to tap into the growing wealth of the emerging markets. They wanted a shot at managing the fortunes of the entrepreneurs in emerging markets. And now, because of U.S. security regulators, they can't do it. And of course, that diminishes employment opportunities here in America. And I know about this because I went through the same thing. You know, in a routine audit of my firm a couple of years ago, I had a conversation with one of the regulators, and he asked me point blank, don't I think it's suspicious that somebody in Australia would open up a brokerage account with my firm rather than open one up in Australia? And I said, no, I don't. I just think it means I've got a good product and I'm winning this global battle as we compete for customers, and I think it's a victory. But the regulator told me, no, it is very suspicious. It could be indicative of potential money laundering, and as a result, all of these overseas accounts have to have special scrutiny. It costs a lot more money to open and maintain these accounts. And quite frankly, the foreign customers didn't like to jump through all the hoops that the U.S. regulators had me put before them.
In short,
so it made me uncompetitive, and I shut down my overseas business as well, and I moved it abroad. I actually set up a separate brokerage firm in the Caribbean
but
to
Peter,
handle the business.
They told you that you basically have to treat anyone who's a foreign customer as if they could be a terrorist. And I think people watching out there in the audience would say, you know, number one, we've seen a lot of scandals where we've seen money laundered through banks or firms that had a branch here in the U.S., so it seems almost reasonable that they would put this sort of burden on you. And number two, they say, oh, rich broker bank guy, I don't really care that you're being regulated like this. How does this impact me? So tell me the answer to those questions.
Yeah, well, first of all, it's not reasonable at all. And basically, all of this anti-money laundering came about as a result of the September 11th terrorist attacks. So supposedly, it's all there to track down terrorists. Well, my clients aren't terrorists. Somebody opening up an account with me, you know, from Australia because they want to do business with me, they're not a terrorist. The odds that they are a terrorist is infinitesimally
small. But how does the regulator know that? I mean, they're there to protect us. They're supposed to not, you know, be preventing people from laundering money through the U.S. How do they know that? How do you know that?
Well, the bottom line is, first of all, even if they were a terrorist, if they didn't send their money to me, it's going to go someplace. I mean, in fact, if they just put it in gold, they're going to beat most money managers. But the fact of the matter is they're not terrorists. But they're not talking about terrorism. They're just talking about money laundering. But, you know, it's not money laundering. How many people in Australia are laundering money? I mean, the reason that I'm getting their business is because I'm able to appeal. And that's what Merrill Lynch was doing. They were able to use their expertise to try to win overseas business.
But listening to what you're saying, I mean, if I want to launder money, I'm just going to go to Australia then and send my money to you from Australia then, if you're saying there aren't money launderers in Australia. But let's get back to why this is really important, though. You're saying this is costing America jobs, right? How is that the case?
Well, in my case, instead of somebody from Australia sending their money to me in America, I now have them send it to me in a foreign country. And so now I create jobs and revenues offshore that would have been created here. And in Merrill Lynch, obviously, it's a bigger example. If Merrill Lynch can no longer compete on a level playing field for asset management business in emerging markets, where's the growth going to come from? You know, Americans are losing wealth. We're mired in this recession. You've got other parts of the world that are creating wealth. Why can't our financial services businesses compete on a level playing field to get a share of that growing business. We can't do that anymore.
Okay.
Merrill Lynch basically had to throw in the towel and sell off this business. And I would have preferred to have grown my offshore business from America, creating jobs in America in the process. But the regulators made that too expensive. So if I want to grow a foreign business, the regulators really left me no choice but to do it from foreign soil.
Peter Schiff, we're out of time. Thanks so much for coming on tonight. We really appreciate
all of this has
your
unintended
time.
consequences.
Peter, thank you so much. We appreciate your